Well, that doesn't work. Let's try this. Hey, how's everybody doing? Chris Franks with Texas West Capital coming at you live here, guys, 11 a.m. Central Standard Time on Friday, the 1st of March, leap year, right? Had an extra day of trading this year, guys, 2024. How are y'all doing? I'm coming at you live here from just north of Houston, Texas. In case you were thinking maybe I might have had an accent or something, I don't really, but y'all going to say that I do, right? Anyway, man, oh man, what a show I got today, guys. I've got Fibbo coming in. Y'all can't see him, but I see him laughing at what I'm saying over here. He's got an accent. I'm going to let you guys know. This is what when you're from Kentucky. You have an accent, right? See, he can't say anything right now because it's still him backstage. But anyway, he's going to be here, and we're really going to take a look today at Bitcoin. And I've got a chart I think is going to make y'all very, very happy unless you've been waiting for a big pullback to jump in, right? A lot of people have been sitting on the sidelines waiting for that supposed pullback, waiting for the pre-halving pullback that everybody, usually waits for. And Bitcoin has just continued to go up. We're just a few $1,000s, guys, away from the all-time high. Though, that's right there around 69,000, though adjusted for inflation, today's dollars, it should be around 79,000. Bitcoin's going to be like, hold my beer. So we're going to talk about that. I'm going to show you some charts. Fibbo's got charts on all different kind of time frames there as well. And if we get a chance, we'll look at some other stuff too. But with the weekend coming up, the question is Bitcoin going to hit a new all-time high this week? And you guys excited? So right here, before I bring up Mr. Fibbo, guys, do me a favor. Hit the like, subscribe, follow me wherever you're listening in on. Again, I'm simulcasting here on Twitch, YouTube, Facebook, and X. And man, oh man, had a lot of new people follow me on X. Love you guys. Y'all are fantastic. One more thing real quick. If you guys don't know, I co-host a Spaces with Gary Cardone on Tuesdays at 6 p.m. Eastern Standard Time. So make sure you jump in there, guys. We're talking Bitcoin. If you've got something to say, you can jump up on stage, raise your hand. We'll pull you up on stage. A lot of good time there, guys. A lot of good information. And just kind of meeting a whole group of people that are thinking like you. So I got to tell you right now, guys, the one thing I've said for quite a while now is even if you're trading, you need to have a bag of Bitcoin sitting on the side. Don't touch it. Don't intermingle it in wallets with your trading wallets. Keep it aside. Just let it be, because I think what we're going to see here coming up going forward is just absolutely insane. All right. So Mr. Fibbo Swanee checking in here. Look, we can even see his pretty little face. Look at that. He's got a little bit better angle on today. Y'all, he's real. See, guys, he's not an AI stuck in the shadows there. What's going on, man?
Not too much. I'm just enjoying this nice little run-up.
It's been nice, right? I mean, we went up like 30% in 3 days or something like that?
Yep. I'm loving it. I mean, it was the first time we've broke that 61.8% level prior to the halving, and let it ride. I mean, it's rock and rolling. I love it.
For sure. And anybody that I don't know, unless I guess you've been stuck under a rock, or maybe you just got into Bitcoin, you're just now learning about it. Spot Bitcoin ETFs were approved about a month and a half ago. The inflows the last this week, the past 3 days especially, have just been absolutely insane. Of note is yesterday GBTC had a big spike outflow. They'd been just trickling off, 100 million, 50 million kind of thing. They had about a 600 million outflow yesterday. Guess who had a 600 million inflow? BlackRock, I bet. So BlackRock alone sucked up everything that GBTC had to throw out. It's been absolutely crazy, guys. Fidelity is doing absolutely insane as well. BlackRock hit 10 billion under management here in their ETF. What was that? Just the other day, I believe. So the quickest company, the quickest ETF ever to hit 10 billion. Now, of course, as Fibbo and I were talking about here backstage right before the show, we're not adjusting for inflation or anything like that, but significant nonetheless. I mean, again, it's been a month and a half, guys. It's absolutely insane. And they keep coming in. Now, I saw something the other day that one of these on-chain metrics companies was showing that exchanges only held like 40 Bitcoin. That was all they had left. I don't know that I necessarily believe that. But nonetheless, the reality of it is, guys, earlier this week, they mine about 900 Bitcoin a day right now. Now in April, about halfway through April or so, that supply is going to drop in half. They're only going to be able to mine about 450 a day. But right now it's 900 a day. Earlier this week, there was that, against that 900, the ETFs in total brought in like 9,800 and some change. And the next day they brought in over 10,000. So, whatever supply is sitting out there is getting sucked up. If you wonder why we're kind of moving faster and harder here, it's because simple supply and demand, guys. The supply of available Bitcoin, like me, you ain't getting my Bitcoin. I don't think you're getting Fibbo's Bitcoin. So, available supply of the available supply out there, that demand is just coming in so strong. And I think, again, guys, I've been talking about it's only beginning. So what do you think, Fibbo, man? How are you looking at this? We've got the all-time high, just up above here. What are you looking for, man? Just generally.
Before I go into that, you remember? We're old. Do you remember Ross Perot way back in the day saying that giant sucking sound?
Yes.
Yeah, the giant sucking sound.
Yeah.
That's BlackRock sucking up all the GBTC that's exiting the market. They're just sucking it up like a freaking vacuum. But that is kind of nuts. And another thing was, we were talking about backstage when the gold ETF came out way back when. It took 2 years for them to get to 10 billion. It took us a few weeks, and that's pretty insane. Yeah. So it's it's absolutely crazy. But what am I thinking? I'm actually, depending on how you look at this, I'm in liminal space at the moment. I'm a little bit more on the cautiously optimistic. I do like that we broke the 61.8% on the prior to the halving. And I'm seeing some really good metrics when you look at some of the longer term stuff. But when you look at the 4 hour and the daily, time for a correction makes sense too. So it's one of those things where emotions. So when I say liminal space, it's when the emotions run the highest, and waiting to break out even more, or do we correct? And I'm kind of in that bubble at the moment, but I'm being cautiously optimistic because I lean more toward a continuation based on what's going on the general supply and demand of the market. So I'm leaning toward that more upside is ahead, to where we can get at least up to the all-time high. I think it's kind of not a foregone conclusion, but once we broke certain levels, it kind of you're in this area of very little resistance up until that point. So I feel like we can get up to at least that point before we correct, or we could correct right here. It's one of those deals that you got to kind of look at it and stick to plan, and whatever plan you have in place, stick to it, and don't let the emotions run crazy and jump in when you shouldn't be jumping in, or getting out when you shouldn't be getting out, that kind of thing. So you got to kind of measure it that way. But I'm leaning toward more upside at the moment, based on how you look at this, whatever time frames we're looking at. But that's what I'm excited, but then again, I don't want to get too overly excited because this thing could correct back pretty strongly on some profit taking if the ball starts to roll. But right now, I'm not seeing much of that. A lot of the earlier time frames are getting into more consolidation. So maybe we get into consolidation, get a little bit more accumulation, and then start taking off again. But we'll see how that goes. But that's where I'm at. I'm excited, but then again, I don't want to be too optimistic. Don't
want to get ahead of yourself, right?
Yeah, cautiously optimistic. That's the way I'm looking at it. And when I say that, it's more of a risk management type thing, more of reduce exposure to the upside, but have some on because you want to continue the trend. But then again, I did take some profit at a couple levels here on the near term because why not? Because my plan told me to. I can always get back in. There's always levels that if it continues trend, I get back in that way. And we can look at it on different time frames here as we go on. But that's where I'm at.
Yeah, and to be sure, guys, just to be clear, in case you weren't sure, Fibbo is talking about his trading bags. He's not talking about his big old lump of bag of digital gold. Bitcoin sitting over there in the corner that he doesn't touch. So, that of course,
cold storage is a different game. Yeah.
Crypto Raid pointing out $18,600 monthly candle in February for Bitcoin. Insane. It was the largest dollar value candle that Bitcoin has ever printed. And It's just the beginning, guys. So happy Friday to everybody. We're going to go ahead and jump in. I'm going to throw up Fibbo's charts here, and he can let us know what he's thinking.
All right. Well, I'll start on the earliest time frame that I kind of look at, and that's the hourly. Watching this one right now, momentum. If you look at the ADX, it's getting down pretty low, so you're getting into this period of consolidation, kind of, a little bit like a triangle pattern, maybe somewhat of a flag type pattern, pennant type pattern. Who knows? But right now, we're getting into this period of consolidation with the lower highs and the lower or the higher lows. But we remain in the bull zone, and that's the main thing that I'm watching. Is if it does dip down to the shallow fib, which right now is at 59.3, I would not be a buyer because I already bought. Because when this rallied up the other day and hit I had a 64K target, which was inside of this zone, which actually hit, and then it came back down pretty quickly. It was that crazy candle we had the other day. And I bought back in already. I actually did it on the 4 hour, but it's the same thing on the hourly here, to where I bought back in. But since we didn't make a new high, I'm not going to add more at the shallow fib because I'm already long back here waiting for more upside. But if it does get down to the shallow fib at 59.3, it'll stay inside the bull zone. So the shallow fib would be an area to buy. If it holds there and takes back off, I'm looking at the next target, which is at 70,300, because the extension level already hit its target. So it actually extends it up much, much higher. That is pretty high on an hourly. So if you needed to get a little bit closer, you can look at other ways of getting to it. But right now, I'm looking at a shallow fib possible buy there. And also, and if it drops all the way down to 56.4, it's still above this previous shallow fib at 55.9 that has never broken from a previous one back here, because we had a bull zone, went into the bear, went into this period of consolidation right here, where it went kind of back and forth, but low momentum on the ADX. So this level right here is kind of my line in the sand, that if it breaks this 55,986 to the downside, then we're probably looking at low 40s and back down to some of those other levels down at 42.8, maybe around that area. But that's a lot of ifs. But we'll go from there. But let's look at the 4 hour, and this is what I'm kind of watching here. And this is the same thing. That previous shallow fib, just like on the hourly, is that kind of line in the sand. But I'm also in the bull zone here. We bought. And this is where I was talking about. We had that sell, came back in and bought the shallow fib. So if we actually get back down to 59.1 is where I bought at. So if it gets back down to the shallow fib and you're not long, that would be a spot to start to get back in. And then I have a fib extension target from other patterns at 65.4, which is going to be the sell for my 59.1. And then if it comes back down again, wherever that shallow fib would be, just say it goes up to that target, the shallow fib is going to be roughly just over 60K, and that's where that new target would be. And then if that holds, the next level is at 88.5. So because we're getting into those levels that if it starts to pump up against that previous high, and that's what this red line is the 69K area. So if we get back down here and test the shallow fib and it starts to launch, momentum is with the bulls pretty good. We're kind of back into a nice correction area for the bull zone as it's kind of holding that upper line to when it goes into the zone. It's kind of touching right here. To me, that's a good spot to get a nice lift off to continue the trend. Not that it can't correct all the way back. Let me get my fib back down to where we were. so right now, when you look at the shallow fib is at 59.1, it could actually kind of wick all the way down to the 61.8% level, and then back up would be nice. But when you look down here, the bear zone right now is at 57.2. So even if it gets down to the shallow fib at 59.1 again, it still stays well into the bull zone. So it would have to get below 57.2 to break into the bear zone. But then a wick down to this area, I feel like there would be a lot of buying interest if it dips down into that area to start taking us back to the upside. So right now I'm long, target 65.4 to take profit. If it doesn't get back down to the shallow fib after I take profit, then I'm going to go with the 3 consecutive settles above 67.2, which is the top of this range. This red range is the 127 to 141. I had to get it from way back in history because we're getting back up to the highs, but that's the zone that we're in. So if we get up to this fib extension target, and then it never gets back down to the shallow fib, and I never get back long again, 4-hour candles above 67.2, I will buy back in to continue the trend. And then that's where those upper targets come into play. So that's what I'm kind of looking at on the 4-hour. And then I'll go on to the daily, and I'll flip it over to Chris, and then we can look at some things before we get into longer term. But the daily is definitely a bull zone, getting well up into the overbought conditions, and that's kind of where I'm in that area of, okay, maybe it's time to correct. But again, you can stay in overbought conditions for a while. I do like that we had those 3 settles above 57.4. To where that kind of becomes a little bit of a support in this market. So when you look at this 57.4 on the daily, and then you come back to these levels in here, 57.4 stays above your 4-hour bear zone. So a dip to 57.4, I think, is where that buying interest could come back into the market. The shallow fib is around 56 on the daily, so it'd have to get down a little bit further to get the shallow fib buy. And then the next target, of course, is the I actually have the target at the bottom of this zone at 68.8, which is just below 69. So being long on the daily, 69 is going to be 68.8 is my target. And then, of course, if that gets up there, I'll rebuy the shallow fib, or I would have to wait until 74.7 to get 3 daily settlements above that. And then 99.2 would become the target. Starting to get into some of these numbers that are like, woo, these are getting kind of fun, right? But that's where I'm at on the daily too. Just I'm sticking to plan. It helps me, it takes me the emotion out of this.
Yeah.
Would I've liked to be long even more than I am now? Of course, but I have to play with it. I took some profit. If it goes up, oh well, I'll grab back in if the trend's going to continue strong, or if it drops back to the shallow fib, I'll just add more and press the position. But that's where I'm at on the earlier time frames. But before I get into the weekly, monthly, everything else, what do you got for any of the 4-hour daily? Do you got any, or do you want me to go on further? Either way.
Yeah, I can jump in here real quick. Let me see here. We had a question
here.
Break
it up a little bit here.
Hodling BCC was asking, what exchange do you base price on? And I'm looking up here. He's got the Coinbase. This is Coinbase chart here that he's talking about. So, yeah.
Yeah. And I don't necessarily trade on Coinbase, but this is a great proxy that has worked really well for my system. So when this actually triggers, I actually go to the exchanges I actually trade on. And I don't really trade on Coinbase, but it's a great proxy and it works really well for the zones. I haven't had to change the zones for a long time, and they've worked really, really well. So that's why I've been using this as kind of a proxy.
Yeah. Real quick here, let me see what else we got here. Let me see here. Greg Hawthorne here is saying 900 Bitcoin or 450 mine per day is irrelevant when you consider 15 million Bitcoin supply. It's a great discussion point and good to be deflationary, but it's not what's driving price. It's all about the ETFs now, all about RIAs and warehouses onboarding. Yeah, which is what I was saying exactly. But I mean, it does. When you're looking right now at the flow for the ETFs, what I mentioned at the beginning, this idea that we're mining 900 new Bitcoin a day right now, that's going to drop to 450 here, next month. when you take that into consideration, the fact that the ETFs themselves, nobody else, just the ETFs themselves are swallowing up like 10,000 a day. I mean, it does actually play into it because you have this persistent decline in the available news supply over time, right? But at the same time, you have increasing demand, and not just a bit; it's a significant increase. So yeah, I mean, I think it does matter when you think about that. But yeah, at the end of the day, it's all about that ETF. It's all about that bringing in this bigger money. It's all about the new accounting rules that companies can now hold Bitcoin on their in their treasuries, on their balance sheet. There, I mean, these are big ways of seeing a significant bit of money coming in a short period of time. You know, for each one of those. So yeah, I think it's definitely something to watch about that. Bernardo Reyes wants to know, Fibbo. Let's see here. He's got a hot dog question. I guess this is very important to him. Yeah, it says, Fibbo, very important question. Is a hot dog a sandwich or a taco?
I've always a taco. I've always leaned towards sandwich. I know that I'm probably in the minority, but I go with a sandwich.
No, I would go with a sandwich as well. And I live here in Texas. You know, tacos are sacred down here, especially street tacos, man. Barbara Evans says, would you ever sell your cold storage? Me personally, I can't say. I would never say never because, you know, I haven't been confronted with a specific price that would just maybe make me just do something stupid like that. But at the end of the day, my end game personally is the asset itself. You know, once the asset gets up there and it's up in price and everybody likes it, you know, and whatnot going on there. I mean, it becomes this thing of which you can create wealth with. You don't have to sell it. So that my end game is the asset itself right now. But I'm not going to be, you know, immature enough to say, oh, I'd never sell. I've never been offered, you know, $15 billion. Who knows? Maybe I would. Hopefully I wouldn't, but maybe I would.
Yeah, I guess you can never say never, I guess. But I look at it as a wealth building, and you never want to sell it. You can always borrow against it and use that as a means of collateral. You know, there's many different ways you can, you know, not sell it and use it. But that's where I'm at on it. So my answer would be no. I probably wouldn't if I didn't have to, unless an emergency came up, or like what Chris said, if the offer is tempting enough, then maybe yes.
We're humans. We buy and sell on emotion, right?
Yeah. No, I don't. It would be interesting if we ever one day get that offer. That would be awesome.
There would be signs, right?
Yeah. Yeah. Exactly.
All right, let me go. Let me check here.
I hardly even sell Bitcoin when it's actually starting to go into a bearish market on a weekly. I actually buy puts. I'm into capital preservation. I just buy puts. I keep my Bitcoin. Forget selling them. But I don't know. But that's just me. I'm weird.
The way to do it, right? All right, let me go. I think I got
another
the
way
chart
to do
here.
it, I guess.
All right, locally here. I think I've got this. This is a triangle here to me.
What time frame you on?
This is the hourly right here.
Okay. That's what it looked like.
So I mean, yeah, and so I've got this pretty much looking like this, like a triangle. I mean, to me, that's what it does seem to be.
Yep.
Let me see here. And so based on the height of that, I mean, you know, just based on the height of this, we'd have a minimum expected target on this chart. What is this chart here? This is the Bitstamp chart, the Bitcoin USD on Bitstamp. Would be right up here around a 67,383. Is where it would be just based on this particular, you know, the idea that it's a triangle would make it a wave 4, some sort of interior wave 4. And so initially your target is going to be that 1618 of that correction. And so that gets us up there. But it doesn't have to stop there. We could have some much bigger push up, right? because usually the way that things resolve with triangles on a fourth wave are you either have a sudden thrust, which is where you usually get closer to this target, or you have something that just kind of takes, it's not quite as sudden. I mean, it's going to be a bit, but it kind of just continues to meander its way up, to move its way up. And so when we're looking at on this chart, the all-time high up there at 69,000, that puts us pretty close to them. I'm going to zoom back out there again.
I'm at 70.3. That's just above it.
Yeah. So,
and that's not even the triangle measurement.
Yeah. And for this, so my thing has been, anybody's been following me, I've had two counts. I've had this idea that maybe we were going to have a 1-2-1-2, which is what we've been following, or we would have this idea that this is a 1-2 here. And back here, what was this? About 10 days ago or so, I was taught we were in this consolidation at this large ascending channel resistance. And I was talking about, okay, if we can get an impulsive breakout above this channel, usually that's indicative of a big move up. And if we did that, I would be switching my primary account to the idea that we've got a 1, a 2, and a 3. And so that's where I am now. But here's the thing. Minimum expected wave 3 target, the 1618 extension of wave 1 here, is up here around 77,000 on this particular chart. Again, depending on what your exchange is on, it might be closer to 76. But yeah, so that would be the minimum expected target. But I'm going to talk about something here in a bit after you talk about your bigger time frame charts here, because again, we're looking at this inflow from ETFs coming in so big, so huge. And when we look at that and we consider the fact that there's not that there's a limited amount of available, Bitcoin out there. I think price has to chase up further, and I think we're going to get overextension, and that's where I'm going to bring in this other chart later that I think is really going to make people either in disbelief and call me names, or be really excited at the potential, at the possibility here. So we're going to look at that there, but I'm going to jump back over to you so you can show us here what you were looking at on the larger time frames.
Yeah. Let me go on to my weekly. Weekly is looking interesting. Definitely get into overbought conditions, and that's where I'm, on the cautiously optimistic is some of these look like they should correct, but we're in a different world right now. We're in a world where we've never had this influx of funds like before. So this could kind of just push things further than people expect it to go, put it that way. And that's usually what trends are like, right? Everybody's like, well, how in the hell did it go that far? That kind of thing. So we never know. But we, one thing I liked about this, there's two things that I was looking at. The 61.8%, which was the absolute high and the absolute low here on this chart, was at 48,547. And I was looking for 3 settlements above it to get the break to where that level would become support. So that's already kind of happened with the amount of candle that we had this week. But that 48,547 would become the level to watch for a possible correction to the downside if it happens. I don't know if it's going to happen or not, but if it does, the intersection of this latest trend line and the shallow fib is at 47.3, which is just underneath that 61.8% level. So that would be my fear at the moment. If it actually starts to correct back and everybody's starting to take profit and that kind of thing, if the ball starts rolling. But I got a lot more other signals that look more the other way that I like, and what I'll also be looking at. And I actually look at my threshold theory more than I do the absolute fibs. And my threshold theory, based on my zones, had the 100% at 47,583, which actually had the third settle last week before all this shit went crazy. So that actually worked out really well. So for me, my buy signal hit last week, not this week, based on the absolutes. So yay, threshold theory. That's the way I'm like, yay. So, but either way, the break of the 100% brings the extensions into play, which we blew right through, which I like to see. So now I'm looking at 3 weekly settlements above 60.8. If we get that, say this first week we settle where we're at right now, at 61 plus, that'll be that first week. If we get 2 more weeks above that, then 79.7 becomes a target, and which matches up really nicely with what Chris was saying earlier. Adjusted for inflation, that's the new all-time high, right? So I kind of like that 79K as a level to watch for. So it's not that that matters, but it kind of matches up pretty nicely. So that would be the 200% level, because I look back historically, the probability is really, really high when you get 3 settles above 141% to get that 200% as a target. Now, of course, we got the 69K in the way, that previous high. So I can see it getting up to that point, and maybe we correct back from 69, or we just blow right through it. And given the amount of inflows of funds that we've been seeing, I wouldn't be surprised to have that happen. And then everybody and their brother will start calling me and ask me, is it time to buy Bitcoin yet? And I said, well, I told you back at 15.6 was the time to buy Bitcoin. But that's a whole nother story. But because I was talking blue in the face and people were yelling at me and all that kind of stuff. So, oh well.
Yeah, that's a good day.
But the 69K is a level that we got to kind of watch to see if we can get through it or not. So we can go up to that point, maybe come down and then go higher. But 79.7. But here's the kicker. If we get all the way up to that 79.7, the 69K becomes the support, and then more extensions come into play. Then you got 83 to 91 zone. Then you got 111, 122. It starts getting really nuts here on the weekly as we start going forward. So this trend line here will be the line for me to watch for my support guide. So as we start trading up into this area, this will be my support guide. So it's either going to correct back here now over the next month prior to the halving, or it just continues going and then maybe it corrects later, but this will be my support guide. Now, if this support ends up breaking, then the second trend line comes into play. But that, again, those are a lot of ifs. But what I like that I'm seeing is pushing right through some of these levels that should have brought selling interest in pretty quickly, and it kind of blew right past it. So I'm pretty bullish on this move to making all-time highs relatively sooner than we were expecting, breaking all of this stuff out here on the weekly. Then we go into the monthly. The monthly had a target of 56.4 or so on the break of this trend line, which we busted right through with no problem. We're already starting month on a positive. The timing of this is where that I like to see a low in April going into the halving. But again, this timing was based on never breaking the 61.8% level. I think it was on this chart here that I showed before, where the 61.8% level never broke prior to the halving. It never broke here prior to the halving, but now we have. And this is bringing us into a new realm. So when you're looking at this timing was based on that. So I don't know if we'll get a low in April or not, but if we do have a correction, the correction could go back down to where this initial target was, or it could go all the way back down to 45.5 at the moment. But say we get up to the 69K level before it starts to correct. So this month it gets up to 69, or maybe this Sunday based on our title. Never know. But if it gets up to that point, then it becomes the 48.6. And then when you look at some of these, that 48.6 looks real nicely on this shallow fib here as a target. And then you can look down here. I have 49.1 was that previous low right there before we started to take off. So that becomes into the realm, because 46.5 keeps the bullish zone on the daily. So even if it corrects all the way back to 48 and 48 or so, still going to be in a bullish zone, bullish structure. So that's why I was always kind of like cautiously optimistic. I like the upside here for good, but a correction that wouldn't surprise me either. Put it that way. So, but again, stick to plan. So I really like this. If the 61.8% level would have held as resistance, but since it didn't, it kind of reduces the faith I have in this timing of the low to low to low. But you never know. We could correct. But if we do correct, it would only be to that 48K area, and then I'm looking at possible targets to the upside. Um, the timing of the high to high to high brings in 124K originally, but now that we broke the 161 or the 61.8% prior to the halving, with all this influx of flows, it could be anywhere between 124 and 300K. So, and I'm not saying by next week. The next high was not until the November of 2025. So we could actually go into the next couple of years here of nothing but upside. And everybody would be like, well, nothing but upside for 2 years. But when you look at the, let me look at, I got an annual on here somewhere. At least I thought I did. Maybe it's the last one. Yeah, the annual here. If you look at the annual chart, we had 1 year of down and 3 years of up.
Yep.
1 year of down, 3 years of up. 1 year of down. Yeah, let's do 3 years of up. We're only in the second year right now, and we're already breaking what normally took a little longer to do prior to the or post halving. We're actually pre-halving and starting to go up. So my original high was around that 114, 122 kind of range, around that end of 2025. So when you go back to this chart here, that's where this 124 kind of came into play based on the curve of these highs. But now that we're in a little earlier, it kind of makes it a little higher possible over the next couple of years. So not to say this is guaranteed or by any means, but the upside target is a little bit higher to me now than what it was at 124 for the end of 25, or at least November of 25. So that's what I was kind of looking at there. Another one, I was just kind of looking at certain support levels or resistance levels. This one's at 65.4. That's where I had one of my sell targets, which I think is on my 4 hour, to where I would take some profit on this, and then possibly work our way back down to that 48 and then work our way up higher. I showed this last time just for kicks and giggles. This is not scientific, but you just take the low to the high here on this just trend. And then you had this period of consolidation right here. Then we had another low to high right here that matched up kind of nicely on the same look. And then we had this little bump down, and then we started going crazy again. So when you look at this, then this puts you all the way up at about 75K as that next move, which if it does that, most likely is going to make this line here a support level. And then it brings this open for the next level, moving to the upside here as we move off into time. But if you get all the way out to the end of 2025, you're looking at, way up here into the 140s, 150s, which makes sense based on the movement that we're seeing now. So these are just levels that I'll watch as key kind of support and resistance levels, using the fib lines here on that. And then I just like to show this real quick, just the psychology of it all. As we dip into this, we get into an increasing mood, then we get into peak positive mood, get all the way down into negative mood, and now I think we're back into that increasing mood as we move into that peak positive mood time frame. But it's interesting because this actually worked up, corrected back pretty strongly, and then worked up and made a high during this time. So these peak positive mood areas is not a one point in time. It's kind of an encompassing time period. And right now I think we could be in that. Do we retrace back to the 48? Don't know. Or we can continue higher. But even if we get down to this point and head higher, we're still in this increasing mood and moving into a peak positive mood time frame that could take us all the way out. Basically, it went up to the edge of here, and then maybe we're on the edge of the end of going into the 25 or so before we get into that overconfidence euphoria time frame before we start heading back down again. But so when you look at it from the different time frames, I like that. That's why I'm leaning more toward positive upside even though if we have a correction, it's still relatively strong and relatively bullish. One other thing I was looking at here before, I was kind of looking at the 61.8% level as an area that it would retrace back to at the time of the halving, because at the time of the 61.8% level right here, based on the low and high, gave us the point where the halving kind of started. The same thing here, 7,800 kind of started about that point. But now that we broke that level, another 61.8% level broken here, what it does is it brings us, it basically made the support at 48 instead of 31, because before we had that correction possibility back down into the 30s, but now that we broke that 61.8% level to the upside, the support goes way higher. So what I'm looking at now is just the break of the trend line. So when we broke the trend line level, and then you look here, you break the trend line level, and then if we look at it here where we broke the trend line level, that puts us at 48K. So that could be the possibility of a break before we head higher. But once that happened, once we got to that point, and then it broke up and came back down, it was nothing but up. We went, came back down, nothing but up. So even if it does correct, the pattern shows that we should be going to the upside. I just like that we did it prior to the halving. So we're in a new ball game now. So it's kind of, I don't know. I mean, the answer is I don't know, because we've never been here before. So I got to really rely on my plan, my analysis, kind of stick to my guns. And that's where I'm at on this. But this is where I'm bullish. And I really like this chart, because this is where I get kind of nuts. This is a 2 month, but I like the pattern of this 2 month. And what I'm looking at, when you look at the stochastic RSI here, the crossovers, the vertical lines I have here is when we started to reverse off the lows, and you can see the blue stochastic going up through the orange here, and this is where it kind of started to go off on a run. And then the same thing back here, we made the low and started to take off, and it made that crossover right here. And then we also had it right at this point, and we had a crossover going there on this 2 month. But here's the interesting thing. Right now, if you look at where we're at, we have the orange stochastic going up, to where, and then the blue kind of chasing. So what I did was I put this red line here is where the orange is at the moment. So when the orange crossed here, where the blue was is where I put this line. And that's where we're kind of at the moment. And as you can see, we kind of broke this area and then had nothing but up for the next, many months, to where we're in this period of moving to the higher, to where it's not showing any signs of a reversal. And as you can see back here, it did the same thing. Where the orange was, the blue right at this point started to take off. We had nothing but up for a while. And it wasn't until we got way high and then started to cross back down before we started to get the bearishness in the market. And then the same thing here, getting the bearishness, or at least consolidation before it went bearish to the market. So right now on the stochastics, it's pretty freaking strong. I mean, that's pretty nuts. So to me, we're still in the transition period. We're not even in a sign of reversal. So that's where I'm like edging toward, I like the upside, but be cautious that there could be a correction. But I do like this to where we're, and I just put these trend lines in here for just the timing of the break. I don't know if there's really a trend line here, but it's really, I think it's going to be more of just breaking the all-time high and just going nuts from there. I mean, that's what it kind of looks like, that the pressure could go there. So I'm pretty bullish on that time frame, and I really like this stochastic chart. And then what else I got here? Just the monthly. I just showed the monthly. Getting is still in bull zone, but getting up toward that previous high or all-time high, getting up pretty high before possible correction. I don't know. That's where I'm kind of on this, beating both sides of the fence here, trying to see if it's going to continue or not. But that's what levels are for, and that's what plans are for. If it's going to correct back, then you buy into the shallow fibs, and the shallow fib on the monthly is right around that 48, 47K. And that's where I'll be buying if it actually corrects back. It'll be about a 30% correction, I think, somewhere right around there, if that happens, which is not odd in this world. So just look for that. And then The last one was that annual one to where my targets could be much higher on this high to high to high kind of mentality here. And I think I had that on that other chart too, with the high to high to high,
Yeah.
and then maybe the high there. Who knows? But these are all based on the timing of not having that 61.8% break. So it kind of brings you back to a new drawing board. And that's why I was kind of looking at some of these other time frames and other indicators to kind of give me some, because right now I was leaning both sides. So I had to do a little bit more deeper analysis of different time frames. And now I kind of lean toward more upside possibility as we move into as we move into March. So
Yeah.
I've been rambling a lot and looking at a whole bunch of different time frames, but so hopefully you got something that is either going against what I'm saying or it's going with it. Let's see what's up.
I guess everybody may have been waiting for this chart I'm about to show here, but real quick, somebody had a question. Jesse asked, could the cycle be shorter this time? And it'd be what we call a left translated cycle, which means things are happening prior to the midpoint is what they usually do. And that would say that you get a shorter cycle, right? You get your top sooner than what you expect or what you usually expect. The other side of that is this idea of, since Bitcoin is a technology, is this really more of an adoption curve? Are we really looking more like an S curve? Are we about to get the big leap up as more mainstream becomes the adoption, right? And kind of keeps this going a bit more. So, I mean, I definitely think with as far as we've gone, as quick as we've gone, left translated cycles probably definitely what we should be looking at least at first. But open up the possibility that maybe just something completely odd happens here, and things just kind of continue going on a bit more.
Yep. But no, I mean, it's a good question because I looked at a lot of the left justification stuff and it does make sense. But like you said, I was saying earlier, we're kind of in a new world order. I mean, this is different. We've never had this before. So not that I look at fundamentals, the indicators will let me know. And then so far they're letting me know, especially here on the weekly. We had 3 settles above my level and just freaking took off. So I got to stick with what works. And if money flow is going to come in and knock this thing up to 100K, so be it. If it corrects, so be it. I'll be ready either way.
Yeah. And so with that in mind, and what you've been saying in mind, this is the idea. This is one I'm really looking at right now. So as I mentioned, we went to this idea we're going to have a 1 and a 2 and wave 3. By the way, this is the Bitcoin all-time history index. One of our members let me know about this, and it's actually, the BLX is always a day behind, because it's got to wait for the day to close before it updates the information. This one is real time, goes all the way back. So I think it's a pretty cool chart. But again, on this particular chart, wave 3 would be 77,100 initial target, right? But I'm looking at the possibility. Maybe we have a 1, 2 here, and then a 1, 2, 3, 4, 5 gives us 3, 4, 5. And so instead we've got a 1, 2, 1, 2 here. Well, guess what? This 1, 2 gives us a minimum expected wave circle 3 target up here at 114,000. What gives us a 38.2 pullback for wave 4 to 77.1. Okay, so I said 77.1. Let me see here real quick. The wave 3 minimum expected target would be 78,367 or so. So right around the same area. But this gives you this interior, this big extension for wave 3. And that leads then to wave 3 having a minimum expected target of about $147,400. That's wave 3. Wave 5, without overextending on the wave 4 pullback and then wave 5, 224,000. So I'm seriously thinking this may be what we're looking at, because if we're looking at the flows continuing into the ETFs like they've been, or heaven forbid, continue to increase. We just heard that Bank of America's Merrill Lynch and Wells Fargo approved multiple Bitcoin ETFs for their clients yesterday. So we've got that now. And what you need to understand, guys, what I've been trying to say over and over again, I do these shows with Gary Cardone. He's been saying the same thing as well, is this idea that just pushing into the very low of the high net worth individuals. Really not even pushing into the ultra high net worth. Really, it's just the low end of the high net worth individuals. The largest RIAs out there are not still not allowing Bitcoin ETFs right now for their on their platforms for their customers. Now that may change 90 days, after the inception. So what is that? February, March, April, sometime in April, May, coming into summer, they might start aligning because they get the 90 days doing their due diligence. They've got their fiduciary duties or whatever, make sure they aren't putting their people into something that's just going to crap out immediately, make sure the ETFs are going good. But right now, this inflows that we're seeing is not really these real high net worth individuals yet, or significant, numbers of companies or whatever coming and put on their balance sheet. That stuff's still to come. So when we start looking at how much action we're getting right now with just basically the little of the big guys, right? As the months go on and things continue to go on, you get the bigger. I mean, this does not seem unlikely at all. And as a matter of fact, this wave 3 target up here is actually just about almost the 2618 extension of wave 1. So again, when you're doing wave 3 with Elliott wave, your first target is the 1618 extension. Then you kind of look at the 200%. But once you're popping through there, it's the 2618, it's the 3618, it's the 4618. So this is just based here. There's nothing saying this could not continue to subdivide higher in wave 3, even get to 310,000 or 623,000. I'm not saying that's going to happen. I'm saying that as Elliott wave technicians, we said here, we go, okay, this is where we look minimally to get. Once it goes beyond here, here's our next target. It gives us a guide in which to, on the higher time frames, to understand where price may be headed. And then we just got to work with the lower time frames as the waves divide and subdivide and go up there. So for me, guys, I'm really thinking that if we break this all-time high, that we're going to kind of take off for a bit. I wouldn't be surprised to see us hitting 100, 114 before we get that decent pullback. And what is that going to do? It's going to cause FOMO. It's going to, and not just amongst regular retail, crypto bros, stuff like that, but amongst these people who are trying to get into the ETFs, right? I mean, imagine if you've got money and your particular RIA does not allow you access to the Bitcoin ETF, and this thing keeps going. I mean, anybody that got in the Bitcoin ETFs when they are up like 50% right now, guys, 50% in like a month and a half. It's ridiculous. This is causing people to pay attention. And once we break out and price starts taking off, all of a sudden the likelihood, because now we're talking about a different type of person. We're talking about a much larger, a much more sophisticated. We're not talking about somebody that bumps in and out. We're talking about somebody that buys in and holds for years. So that's going to take even more supply off the market that's not going to be able to be touched probably for a few years. So when we think about that and we look back here along the lines of what Fibbo was talking about, basically the idea is once we're breaking through that resistance, we're basically all up, right? We're all up. And we've broken through this resistance here. I think we're in that stage where we're all up, where we're headed up here. And, again, when you look at it, this isn't like crystal ball stuff or whatever. This is Elliott wave is based on human emotion, which is what price action is. The price action you see on the charts is just a visual representation of this human emotion jumping between fear and greed in the aggregate. That's all it is, guys. If somebody's ever told you anything different, they're wrong. I'm telling you right now. Price action is emotional. People buy and sell on emotion. They're going to try and give you logical reasons afterward, but it's always emotional why people buy and sell.
Yeah, I'm with you on that because my whole theory is based on that too, is measuring the psychology of the market. It's just fear and greed patterns that, and I just use fibs to help bring that, vision of where those things go. But what I like to see on your Elliott wave is the same thing that I'm seeing on my major 8-day cycle chart is once we broke that 61.8% that we haven't had in history, my original target was around 114 as a high at the end of 25. But now it's broke into this 125 to 300K realm. I don't know exactly where it would be. The 200% for me, based on my theory and my fib levels, is 158K, which is smack dab in the middle of the range that you're just talking about, where that could get up to, you know. So when you look at it from an Elliott wave perspective, which you're measuring, you know, psychology, and I'm kind of doing the same thing, but just using different methods.
Yeah.
And we're coming up with a range. I mean, my range now is 124 to 300. I don't know how to pinpoint that except for the 200% that's at 158. So it works really well on that wave pattern that you're looking at. So to me, I like that because we're measuring psychology in two different ways, but we're also coming to this somewhat of the same conclusion. So I like that. I mean, again, it doesn't mean that it's going to go there, but I like that's why I'm leaning toward more upside than correcting way back to 48K at this point. But again, I wouldn't be surprised if that happened. But even if it went down to 48, it does not negate the 124 to 300K realm, you know, a year from now, or however long it takes to get there. So I like that we're seeing that, you know, in that, just the way we look at things. I like it.
Yeah. And so just anybody watching, you know, again, you know, understand I've got almost 30 years. Bible's got, you know, over 20 years. So you know, the reality of trading, the reality of markets is where we're at, right?
Half a century boys.
Right. And so when we talk about it, guys, remember, this isn't saying, okay, it definitely has to do this. It says, listen, we've been around long enough to understand when we need to pay attention. And if we get these certain things happening that we've been discussing, this makes these ideas much more likely. You know, for me, again, as I mentioned earlier, was that big channel breakout. Remember, we're looking at two different counts, but we had that big channel breakout. And I said, if that was, you know, impulsive, usually if you're doing TA correctly, then when you get a proper channel that's broken out like that, price is going to extend. And usually to be, you know, a nice pattern target is the height of the channel at the point of breakout. So if you can measure the height of the channel and put it at that point of breakout, and that gets you up there, to like, I think 80 or 83 or something like that. But these are things that you pick up along the way and you start watching and you say, okay, listen, this is what I'm looking at. But listen, I'm really open to the possibility that this other thing may happen, and that this other thing may happen because, well, what? Well, you know, again, I'm not a big fundamentals person, but at the end of the day, you can't ignore the fact that ETFs are coming in as strong as they are. And there's a very limited supply out there available for them. So yeah, that's kind of where we're at there. But we are here. We are done. I know Fibbo's got to get going. He's got his things to do. He always acts like he's busy. I think Fridays afternoons he just goes and strolls down the park or something like that. You know, he takes his frisbees with him, does some frisbee golf, something like that.
I wish that was the case, but not today.
Hey man, love having you on all the time, man. Love having you with us over there at Texas West Capital.
Yeah,
don't forget to follow Fibbo, man. Fibbo Swanny, just like it's spelled there, FIBOSWANNY on X. You guys can follow him there. Follow me, TX West Capital on there. And if you haven't done it yet, guys, I'd appreciate it if you could hit the like. You know, put the link out there for other people to see it. Leave a comment, even if you don't agree with me. Just don't be a jerk. I mean, come on, guys. What are you, adults or you children? Every once in a while, we got people that prove they're children. You know, it's like, what the heck? It doesn't make any sense to me, but I'm old, I guess.
Yeah, I mean, anyway. I like feedback that's against what I'm looking at. Just be nice about it and let me look at it because I could miss something. You know, we're both learning too. We're learning as we go.
Exactly, all the time, guys. And if you don't have that, you know, if you don't have that attitude of welcoming potential other thoughts and being willing to discuss them, you're going to have a hard time being successful in trading, because when you're so stuck on what you think has to happen, that's really an emotional position. And as I always tell you guys, emotions will get you lost. All right.
Yeah. There's a difference between TA doesn't work, you suck, it's going to zero, versus like what I think it was Jesse or maybe it was Andrew that said, "Hey, what about the left justification?" That's a
Yeah.
good question. Maybe it doesn't go
Yep.
with what we're saying, but that's a good question.
Yeah.
So that's the kind of questions that you should ask, not TA doesn't work, you suck, your models suck because now we're higher than before the halving, all whatever. Just be nice about it, and then I'll be nice back and probably answer your question.
Might become lifelong friends, guys. Look at that.
Never know. Got to be a Baltimore fan though. Got to like the Orioles.
Oh man, see, I missed out on that.
I know you would be.
So hey, listen, guys. Really appreciate you guys showing up as always. Love to have you guys in here. Follow us, on social media and whatnot. Join us over there, Texas West Capital, members.texaswestcapital.com. By the way, I'm about to do something with our group coaching. It's going to be open for a very limited amount of time. It's going to be very inexpensive, and it's going to give you a taste of what we do, but you're only going to have a very limited time to get in there. So be watching for me to mention it. Other than that, as always, guys, the only thing you control is how much you lose. So, keep working on your risk management. Just, it is the most important thing you're going to do day in and day out as a trader. I continue to work on it today, even though I've been doing this long. All right. So you guys have a great day, a great weekend. Fibbo, I guess we'll see you probably 2 weeks or so.
Sure. Unless something crazy happens, then we have to get back on.
All right. Sounds good.
All right.
All right. Y'all take care. Y'all have a great day. And man, oh man, we'll see you on the other side, I guess. Right?
All right. Have a good weekend.
Take care, everybody.